Hello, good afternoon, and welcome to our session. My name is Knizhnik, and I lead the Cloud AI Financial Services product team. Today, we're going to cover our new product, AML AI, and also hear from our customers. All right, as you've seen over the past few months, Google is taking a bold and responsible approach to working with our customers on creating innovative solutions to some of their biggest challenges. This innovation mindset is not new for Google. Our mission, well publicized, is to organize the world's information, making it universally accessible and useful. Google has products, Google has products which individually serve billions of customers. Delivering products at this scale has required Google to build the world's leading AI research organization and invent technology to manage and use data at petabyte scale. Whether we're finding novel ways to identify fraudsters on Google Pay, designing custom AI chips to run AI workloads at massive scale, or pioneer industry-leading approaches to deliver AI in an explainable, safe, and responsible manner, Google solves these kinds of problems every single day. My team has specifically been using the very best of this technology in close partnership with our customers to bring AI-powered innovation to financial services and help solve some of their biggest challenges and demonstrate how companies can use AI for good. Back in June, we announced the launch of our new anti-money laundering AI product. It is designed to help financial institutions detect money laundering more effectively and efficiently. This product is a culmination of multiple years of working in close collaboration with our strategic customers like HSBC and Bradesco. This product has already been adopted as a system of record for money laundering detection in regions spanning Europe, Central America, and Asia Pacific. We are so excited to share the results we've achieved with our AI-only approach. Based on the last year of production use at HSBC versus the previous rule-based approaches, our product is able to detect 2 to 4 times more suspicious activity while reducing the overall alert volume by over 60%. At the outset, we aim to improve these two metrics. We learned after our initial deployment that this also helped improve customer experience, which was delightful. What happened was the requests for information from customers also improved by over 60%. So in our time today, I will give an overview of the product, and then we will hear from 2 of our customers, Rich May from HSBC and Rafael Cavalcanti from Banco Bradesco, who will share their perspectives on working with us to transform their anti-money laundering compliance programs. But first, let's spend a few minutes on the impact of money laundering on the world and why Google has chosen to focus on this problem. So it's well known that technological advancements have made the world a lot more interconnected. The scale and complexity of the global financial network has grown dramatically. While these advances have provided many benefits to customers, they have also opened up new avenues for bad actors to commit financial crime. The UN estimates an eye-watering number, which is more than 2% of the global GDP is laundered every single year. And of course, these proceeds are connected to illegal activity such as drug and human trafficking and terrorist financing. Combating this problem is, of course, very, very hard. And our customers spend a significant amount of resource on their anti-money laundering compliance programs. And a big part of the challenge comes down to the data and the technology available. With trillions of transactions now flowing through the financial sector, our customers are left to make sense of a huge amount of information. So essentially, the complexity of the problem has now exceeded the ability of current methods to address it. Over the course of us developing this product, we heard some of the challenges our customers face. We've heard that incumbent solutions rely on manually defined business rules, and those systems generate too many false positives. We've heard also that the siloed data make it hard to find the right signal, which adds time and complexity to combating the problem. We've also heard that analyst workflows are tedious and inefficient, which leads to high staff turnover. So why is the industry still using these methods? Because good AI in regulated industry is hard. Our customers have previously tried to deploy AI as a primary means of money laundering detection and alerting, but this has rarely made it out of the proof of concept stage. They have faced significant challenges in explaining their models to internal audit groups and to regulators, and gaining confidence of risk coverage on an AI-only approach has proven elusive until this moment. So what have we built? We have built a product which uses machine learning to detect potential money laundering using a holistic view of a customer's data. We do so in an explainable way for both analysts, risk managers, and regulators. We provide robust model governance so that it is easier to adopt this product. We have made sure this product is flexible so that the customers can cover the risks that they prioritize. And all of this is, of course, deployed to the customer's own isolated environment, meaning their data never leaves their environment and it is governed by their own encryption keys. We know that the AML KYC program covers a broad range of mission-critical areas. It ranges from customer onboarding to sanctions screening to, of course, ongoing risk monitoring, including AML, fraud, and scams. I wanted to make sure that it is understood that our product current focus is on providing a more effective and efficient way to perform transaction monitoring and ongoing monitoring of customers for money laundering detection. So what does the product look like in the customer's environment? So our product is an API, and it is designed to be easily dropped in and seamlessly integrated into your existing anti-money laundering ecosystem. The API automatically trains a model which uses a holistic view of customer data. We use data such as transactions, accounts, KYC data, as well as any additional data the customer may choose to incorporate. We combine that data with previous risk events, such as identified suspicious activity. And then we automatically create a holistic risk score and explainability, all of which feed into your existing case management systems, where the analyst can review and investigate only the high-risk alerts. Those analyst actions provide the feedback loop that ensures our product can adapt to changing data patterns over time. We offer, as I mentioned, very rich explainability. We want to make sure that our customers understand what specific risk indicators contributed to the score. So on the screen, we have an example. In this case, rapid movement of funds was the predominant factor that contributed to the overall score. Explainability such as this is used in 3 different ways. It's used by the analyst, so they know what to investigate when they see an alert. It's used by risk managers to determine which risks are effectively covered. And it's used by model governance to understand how the product is operating. Model governance, we've learned, can take over a year in a financial institution to get from proof of concept to production deployment. And it can take a year because of the rigor and justification and validation of the approach rightly required by financial regulatory bodies and internal governance boards. So out of the box, we offer robust model and risk governance based on both our own responsible AI principles as well as the financial regulatory requirements. This includes documentation of concepts and methodology that we use to construct the product. Also, the metadata that is coming out of our API, which explains how those concepts have been applied. One of the additional challenges in adopting machine learning in production is gaining confidence to actually go live. And so with the APIs that are simple to integrate, with a flexible data schema and customizable risk typologies, we aim to make that process a lot easier. Our product uses a data-driven approach so that you can build your case for adoption. This data-driven approach has three elements. The first is, of course, measuring the risk coverage the system provides based on your typologies. The second is measuring the effectiveness of how much more suspicious activity you're able to detect. And the third is how much more effective are you making the overall process. With these three data points, we see our customers really gain confidence and make the case first for themselves and then for all of their stakeholders to really go live and make the case for adoption. So with that, I would first love to offer my congratulations to the HSBC team, who's been our pioneering partner. Their work in transforming their AML program resulted in them being named the Celent Model Risk Manager of the Year. And AML AI is at the heart of their transformation. And we are very honored to have two customers here with us today. I will introduce them. So we have Rafael Cavalcanti. Rafael is the Senior Vice President of Data and Analytics at Banco Bradesco.
Hi, guys.
Thank you so much for joining us. Please. Rafael leads a team of 350 data scientists and engineers on projects across multiple business units and functions. And by mobilizing the organization with a data-driven mindset, Rafael has generated value across efficiency and cutting-edge customer experience, resulting in huge P&L gains. Welcome.
Thank you.
Richard May, please welcome to the stage, is the Group Head of Financial Crime for Commercial, Global, and Markets Banking at HSBC. A financial crime expert with over 25 years of experience, Richard previously served in a variety of roles at the U.S. Department of Treasury, including Deputy Associate Director for FinCEN Enforcement Network. Prior to joining U.S. Department of Treasury, Rich also served in the U.S. Army, leading soldiers in Iraq and Afghanistan with the 82nd Airborne Division. Welcome both. Thank you for joining us. Actually, okay. Thank you so much for joining us both.
Thank you.
All right. So, first of all, thank you so much for the partnership. We honestly couldn't have asked for better partners with the two of you. I wanted to first mention that this was a journey for Google in terms of many firsts. And your approach in combating this problem in each of your individual institutions has been formative for us in how we thought about the product. So thank you.
Thank you.
Okay, so we'll start with Rich. Rich, before we dive into AML's transformative AML journey, I wanted to take a chance and benefit from your deep expertise in the subject and get your perspective on what challenges do you see facing the industry and the regulators today, and what opportunities do you see for a paradigm shift?
So challenges, we have tons of challenges in this space across the industry, but also at HSBC. As I talk today about our journey that we've been on with Google throughout this, the challenges that I'm going to talk about for industry are the same challenges that we had to overcome ourselves. The first is that in the compliance space, everyone that is in the compliance field has been dealing with rule-based monitoring systems for the last 25, 30, 35 years. Everyone in the compliance space has grown up on rule-based systems. It's in the DNA of a compliance officer. They like them because I want to look for X. System, go look for X. You get a lot of confidence. You really feel comfortable. The system is doing what I told it to do, and therefore I know it's doing what needs to be done. So that is a challenge because our regulators, our other institutions, everyone has grown up with that mindset. And it's very comfortable to have that mindset. When you switch to AI, an AML AI product like this, you have to flip that on its head. And now you're trying to convince people that have been doing the same thing for 30 years of a different way to do it. And to be honest, the benefits were somewhat theoretical. AI hasn't been around that long. So you have to take this leap of faith that what you're proposing is going to be a better outcome, that you're going to find more financial crime, that you're going to do it faster, that you're going to do it with more efficiency, but that's not known. And so you get an entire population of your regulators, other industry participants that look at you somewhat skeptically. The first conversation we had was, we're going to find more financial crime, we're going to do it faster, and the first response you always get is, I don't quite believe you. And so that's the #1 challenge that we had across the entire industry and dealing with our regulators on this. The second is data. This product works when you have the right data in the right place and that it's clean. Data is the bane of my existence. None of our data was in the right place, none of it was properly cleaned, so it was a huge amount of effort for ourselves as well as for anyone else in industry to get their data into the place that it needs to be for it to be used properly by the product. The last thing that I'd say all of industry is trying to struggle with is just how do you then stay on top of emerging financial crime risks? Is the system adaptable enough to be able to learn and to grow as the risks change? And so you need a system that can be a living, breathing, manageable system in the light of everything else. So those are the first 3 challenges that jump to mind. There's 1,000 other ones. We can talk about model risk governance. We can talk about all that. There's a million challenges, but those are the top 3.
Thank you so much. You can see how those factors will drive innovation in this space in a really significant way.
Yeah.
Rafa, turning to you. What do you see as an opportunity for AI in combating financial crime and more broadly to solve some high complexity challenges in financial services?
So yeah, I think historically, data and modeling have been a very key part in Brazilian banks overall. I think when the whole Brazilian economy stabilized and credit became something very critical, rule-based systems, right, were a limited part of our capability of offering financial services to our customers. So it naturally evolved to adopting, I would say, models and AI a little bit to incorporate the way that we define the level of credit, limits, and approval rates. So when it comes to the way that I see AI brings benefits to the financial services, there are 3 key things. The first one is efficiency improvement, right? So traditionally, banks that have been around for 80 years, we do have a large physical presence, branches, and there is a lot of opportunity to think about our engagement models with customers, leveraging data to optimize our operations from the front office perspective, including back office perspective. The second one is control enhancements, right? I think naturally, our capability of combining all the data that we have from customers in different channels provide us a clear understanding of what the customer is doing and what the customer is trying to pretend they're doing as well. And I think the third one is the customer experience itself, right? Our ability to understand what's happening, and as a natural result that you shared here, right? Once I reduce the amount of information I need to ask the customer, and many times the customers do not understand why you're asking, since they probably already provided us, we'll definitely get tremendous benefits. And I do think those are the key moving things that I saw in the market. The first one is regulators requiring us to raise the bar in terms of controls. So in 2020, our central bank told us that we need to have a consistent internal method of evaluation that would bring enough robustness to our decision process. And again, rule-based systems kind of have some limitations in order to achieve that. And the second one is customer expectations itself, right? The customers, they have risen the bar in terms of all the things that they naturally use either via streaming recommendation, either engaging with us through an instant message app. So those are the two things that are really motivating banks to leverage data and AI in our decisioning platform.
So even with the model governance complexity, right, the changing customer expectations, do you see a changing appetite in the adoption of AI in financial services?
For sure, because again, the kind of results that we see here, it's reducing complexity in terms of operations and also being more efficient in terms of what we do. So the appetite is really moved by the financial benefits it actually brings in the end of the day. And those tangible financial benefits are also matched by the increase of the experience of the customer. So if I incorporate an AI recommendation system that would provide personalized experience in my digital channel, I would definitely have more engagement for the customer with myself. And as a result, everything that I talk to him will make more sense. And as a result, he will definitely accept the offers that make sense, that are suitable for him or for her.
Thank you. Rich, turning to you.
Yep.
So you've spoken extensively on the opportunities that the industry has to partner with technology companies and leverage the best of both worlds. Can you talk a little bit about how this partnership came about, what concerns maybe you've had in the beginning working with Google, and how you've come around potentially around these concerns and where we ended up?
So we've been working with Google for about 5 years now. I joined about 4 years ago, so after a year. It's been really wonderful to work with Google as a partnership, mainly because of how much development it's brought for me personally. So when I first got brought on board to be the HSBC side of this partnership, I didn't believe that AI would bring the value and the benefits that it would. I was skeptical. I saw what it was proposing, and the numbers, I couldn't believe them. And so I said to my boss, I'm like, are you sure about this? I'm not really sure that this is going to do what people say it's going to do. And my boss rightfully said, great, if they convince you, then you can go convince everyone else. So I came in very skeptically, not sure that I believed everything that was going to be there. We've all had those situations where someone comes in promising everything under the sun, and then you get 10% delivered, and they kind of wasn't that great. What we have found through this partnership is, one, we had to change our thinking process. We knew what we wanted to do. We had our objectives: find more financial crime faster and more efficiently. Those were our objectives. The problem that we had was we thought we knew how to do that. And we had to strip that away and come in and say, here's what we're trying to achieve, and work out how to do that with Google, instead of us just coming to Google and what we want to do to achieve that is X, Y, and Z. Because what we found was X, Y, and Z, the steps that we thought we wanted to do were limited by HSBC's own kind of knowledge and the lens that we were looking at it through, where a lot of the stuff we were proposing, I can't tell you how many times I heard Google people say, why are you even doing that? That makes no sense. It's much more effective just to do this. And we just didn't know, and that's fine. But for us, we had to take that step back, strip down to what are we trying to achieve, and then we were able to truly work together in a partnership and get there and actually have a better product delivered that I actually can stand behind, that I believe, and I see the results. Those numbers up there, the 2 to 4 times more financial crime found, 60% reduction, those are low estimates. Those are generally available numbers that we can put out there. The actual true numbers are better, but I can't get as precise as I'd like to be in a public domain.
Find us later. Thank you. You both have been incredibly generous with your expertise in the combating financial crime. And I think that combination of Google's data science prowess and the expertise has been amazing. All right, Rafa, how would you describe our collaboration?
So I haven't seen this presentation before, but I could definitely say that myself and the team, we have lived this presentation, which I think is the most important thing. I think conceptually, we had first one challenge. Our data was not fully in Google Cloud Platform. Our data was residing in some systems that were either on-prem or other cloud. So I think this was the first challenge that I would say we had to face. But again, it was I would say, a fairly basic challenge to overcome because there was some embedded expertise in Google's team in terms of what they have already worked in other banks. And I think the second challenge, a little bit different from what Rich shared, is that we had a model that we developed in 2021 that I was asked many times, but isn't the model that you made good enough? I said, I don't know. I mean, it's the first model we did, and I don't have any specific benchmark because the market really lacks benchmark in terms of accuracy and precision of models for AML, right? If it's a credit model, we have bureaus that has historically developed models, and we do have a benchmark. So either from the bank perspective, I had two very interesting potential outcomes. The first one is after 3 months of collaborations, we would find out that the model technically has the same accuracy that we have. It's fine, but even that is a very good outcome from us, right? But I was definitely expecting that we actually reached a significant improvement in terms of performance. I think it was not only our capability of finding financial crime events, but also the increase of capabilities of finding high-risk financial crime more rapidly, that I assume it is something very key to what we do. And again, it was, so the product here was actually thought as a data product. So it was not only a set of APIs, it was a set of APIs that would make sense when you go to production. It was not only a specific data pattern that would have to follow, was a data pattern that makes sense within the AML domain scope, but also was willing to be open so we could aggregate some specific data that was relevant for us in the Brazilian market from Bradesco's perspective. So I do see that combining the flexibility and the quality of work, like many times in the meetings that we had, I had a hard time identifying if the data scientists were somebody from the bank or somebody from Google, which I think is a very good feedback, because my team learned a little bit on the way that Google would do engineering, and perhaps our Google team also learned a little bit of the landscape of AML in Brazil.
Definitely. I'm really excited to hear about the flexibility part. I would say when I was working in banking, I was really focused on having a really powerful core capability and then being able to extend it to make it fit my use cases. So really focused on that. So I'm happy to hear that.
It's not easy, but we managed to do that.
It's definitely not easy. So moving from vision to production really takes confidence. Rich, what were the metrics that you used to gain that confidence? And initially, both for yourself, you mentioned that you started as a skeptic. And then how did you bring your peers along? How did you bring regulators along?
Yeah, so metrics, right? Everyone has those benchmarks. No truer words have ever been said than the banks love a benchmark that they can dress off of, because that's absolutely right. Now, we were fairly lucky in that we were using our static rule-based system as our benchmark, which was industry average, which is not great. Industry average is terrible. Ours is definitely industry average and pretty good for industry average. But what we knew we wanted to do is find more financial crime. So we took the amount of financial crime that our rule-based system was identifying, and we looked to see if this model, when deployed against our customer base, would identify more financial crime. And so we did a lot of testing and experiments to see that. Did we actually identify something that the other system did not? And we routinely and every time did. We found more financial crime. And so that's really what ultimately became our path to success. We took those pre-existing standards and what we were doing with our current system, and we were showing the promise and capability of the AML AI product to our internal stakeholders, to our regulators. And when you put the evidence in front of people, it tells the story for you. I didn't really have to go out and twist arms or convince or do anything. The evidence was there. We showed how many times we were finding financial crime before, how many alerts had false positives. We showed what this model was producing as far as the amount of financial crime identified, how fewer alerts there were because those false positives had been ripped out, and the story tells itself. And so I didn't really have to go convince people. I just had to do the work to show and to produce the evidence, and then put the evidence in front of people. And once you put that evidence in front of people, it's hard to say why you would not adopt it. And that's the way that we would routinely put that to people that may have been a little bit more hesitant of, This finds more financial crime. It does it more effectively. It does it faster. Why do I not turn this on? And when you put it to them that way, they don't have a good answer except, well, this is just not the way we've done it before. Okay, we're going to change because this is better.
Did you find that there was a need for parallel runs, or did you adopt it a different way?
This was a rule for us, no parallel runs. So in the compliance space, everyone wants to talk about parallel runs. So you have your existing system on and producing, and you turn on your new system, and you run them in parallel for a few months, 6 months, a year, whatever it is. We knew we didn't want that. So we took almost an approach of once the ships landed on the shore, we burned the ships. So we would do a day one full switch over. We would do it. We have a very good testing regime of how we got comfortable. But then once we got comfortable, we said, we're not looking back. Why would I keep running a system that's inefficient and not doing as well as this other system? I am turning this on. I don't need both systems running, so we're not going to do that. So parallel runs for us, either you're confident that you want to switch systems or you're not, but you can't have one foot in both camps. So if you actually believe you're doing the right thing, do the right thing boldly, and that's what we did.
Sounds like a very thorough approach to get to the answer.
We had a slightly different approach because, again, internally our work was a collaboration between the AML team and my team. So I think we realized that it would be relevant to have a short parallel run in order to make sure that people was extra comfortable in terms of the AML escape. But again, it was something very particular for our organization that I think at the end of the day, like when we finished the parallel run and we took a look at the results, they had the same feeling in terms of let's do it accelerator. So at least I tried to convince them that parallel runs that last 1 year is actually because we're not actually believing it. So it should be quick and fast, as Rich said. But again, our organization understood that they would need a little bit more time in terms of the case analysis, and that's fine. It took more time, but again, we achieved, I think, pretty good results.
Relatively speaking, actually, our proof of concept ran really fast.
Okay, good.
Maybe inside it felt like, okay, there were stages, but actually, I'm pretty excited what we've been able to accomplish in a short time.
It was a sprint parallel run, I would say.
It definitely was. So now that we've completed a successful proof of value and you've seen the results, Rafa, what do you think you're going to need to clear the path to production?
So I think now it's basically doing the tech integrations. I think a little bit of the scenario that I mentioned regarding data was not fully residing in GCP was something that during the development phase was fairly easy to overcome. Now we do have some structural work to do in the next couple of months. But I do see that we'll be deploying and using it besides the parallel run by the end of the year. Hopefully.
For both of you, actually, so maybe starting with you with Rafa and then you, Rich, how are you thinking about this transformation from, yes, technology, but also people and process? Starting with you and then for Rich.
So I think it is like 3 years ago when we started the engagement with the AML team, it was really difficult because as Rich said, everybody was fully relying on specific rules. And it took us probably 1 year to understand what actually it meant, a high risk regarding AML. Because since everything is based on rules, and those rules get fairly complicated in order to emulate the reality, it is not very easy to document, and sometimes it's not very consistent, and it does incorporate a lot of subjective when executing. Because even though it is fairly simple to translate like the rules that I'm speaking here to actual rules in the systems, many times it doesn't reflect. And we were discussing with some AML specialists, they would say, but in this specific case, I need to A, B, C, and D. So it took us a great amount of time to understand how data analytics could actually bring value. And I do think that it is part of the data analytics team purpose to work along with business. In this case, I'm considering AML guys part of business, right? Running risk as a business, to make sure we understand each other. And again, they are the experts. We are the ones bringing some technical stuff that would make their work better. So I do think that having internally a team that could navigate understanding the data and the business process was very key when we went along with you guys to have the same discussion. So I do think this was a very key point for our success.
Thank you. Rich, have you had to change anything around the people and the process, and obviously the tech you've changed?
Absolutely. We've had to change quite a bit. So on your PowerPoint presentation, there was a question about risk coverage on there. So risk coverage, which I actually find very interesting, and probably the only one in this entire building that does, risk coverage is very simple. You have a risk of shell companies. You have a risk of high-risk geographies. You have these risks. And all of those risks in a rule-based system are tracked to a specific scenario or a series of scenarios. It's very easy to say, I have these risks, and those risks are covered because I have these scenarios running. With the AML AI product, you don't have that. So you actually have to flip it to the output and look at the output of the product and ask yourself, is the product identifying those risks in the way that you would expect? And so you're able to actually say, I do have risk coverage, not because I told the system what to do, but because I see the output of the product showing that those risks are getting detected. And that's just one example of a whole bunch of ways of how do you manage and govern a monitoring system like this in a bank working at scale. And so you have to find all those places where people were taking a comfortable reliance that if I told a system to do X and it does it routinely, then that's good enough. And you have to figure out how are they going to actually do that in the new model. That's one. The second part are investigators. Ultimately, the output of the product goes to an investigator who's going to look at that. Can they understand why that case is landing at their feet? So we had to do a lot of work with our partners to make sure that that explainability was clear enough that an investigator could pick up that case and figure out why is this coming to me, and then work through it as quickly as possible to get to the right outcome. And that meant that we had to change some of our internal pipes and architecture to make sure that we were providing them with all of the explainability information and data up front, so that way they could come to that conclusion as quickly as possible. Those are the two most fundamental people things that we changed. But then the last is just the hearts and minds of convincing people why AI is not some scary thing. People talk about it like it's, I don't know, something that they can't even wrap their head around. We had to do quite a few classes and teach-ins to teach people what AI machine learning actually means in the bank's context and how we were deploying against this problem. Spending that time up front, teaching them, and then helping work through how they were going to do their day job and meet their accountabilities, ultimately got them more comfortable. But boy, that was a lot of work. We're still doing it. It's still a lot of work. It's not done.
Thank you. All right, turning our sights to the future, what do you both see as the opportunities for AI in combating financial crime? It feels to me like we're at the start. I don't know if you share the view. Maybe, Rich, start with you.
I absolutely think that we're at the start. I have a friend who just retired, and what I'm about to say will give you an indication of his age, is that he's been in compliance for a few decades, and he was around when we went from manual human review of transactions to identify suspicious activity to when computers started to get brought in. And he always loves to tell the story about how he went to the regulator and said, we're actually going to start using computers to monitor transactions for customers. And the regulator said, well, how can you be comfortable that that computer is going to do as well as your human checks? Within 5 years, the regulators had switched from how are you comfortable to why aren't you using computers for your transaction monitoring? We're at the same kind of inflection point. Right now, the questions we're getting from regulators to date have been, how have you gotten comfortable that using this AI-based model is going to be effective for you? In the next 5 years, the question's going to flip to the other banks to say, why are you not using AI? It's shown that it's effective. You have the capability. Why are you not adopting something that's going to be better, that's going to find more financial crime? And so I think over the next 5 years, that's what I expect to see. Additional use cases that are now being driven by the business because they see the value in what's getting produced here out of this product. But then the regulators, I expect, will probably flip a little bit and say, Okay, we don't have as many questions about AI. Why aren't you using AI? What's your reason for not adopting it? And I think that's where we're going.
I would add to Reed's scenario. I would say that we do have here a framework that would provide us the probability of a high-risk customer, explainability, and we do have the whole empowerment of the investigator, leveraging him with more data. I do think that generative AI may play a big part on that because it helps get a lot of domain-specific knowledge. And many times we're talking about a specific company that works in a specific market, in a specific context. And we do have still a lot of manual processes in terms of report generation that could definitely be leveraged, combining, I would say, the co-pilot aspect of what we have, that is basically leveraging good, consistent statistical models with a lot of acceleration regarding summarization and crawling the internet with good data.
All right, thank you both. I am really excited to see where we go next together. Like I said, we couldn't have asked for better partners. Thank you so much, and thank you everyone for joining us.